Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, April 16th. Intel is back in the market's good graces today, as investors are showing their appreciation for a better-than-expected first-quarter earnings report and outlook. The bullish reaction is peculiar in that Intel basically delivered on the initial revenue guidance it provided in January and the lowered gross margin expectation it shared in March. The peculiarity is that the guidance in both cases was regarded as a negative that weighed on its stock, particularly the revenue guidance of $9.4 billion to $10 billion, which contributed to a 12% decline in Intel stock on January 16th. Notably, Intel stock held up quite well on March 4th, shedding just a penny after the company cut its gross margin expectation to 54%, plus or minus a point, versus prior guidance of 56%, plus or minus a couple of points. What Intel reported last night was a 9% increase in revenue to $9.7 billion and a gross margin rate of 53.8%. Its stock rose as much as 8% following the release. The big gain in the stock stemmed from a sense of relief that A, the first quarter results were better than feared given the revenue warning from Advanced Micro Devices, and B, the outlook was relatively upbeat. Looking to the second quarter, Intel is forecasting revenue in the range of $9 billion to $9.6 billion and gross margin to be 56% plus or minus a couple of points. For the full year, it is projecting gross margins to be 57% plus or minus a few points. The latter is unchanged from the forecast Intel provided in January and has created a sense of optimism regarding the pricing environment for its microprocessors, the acceptance of those products, and overall demand. Importantly, Intel clarified on its conference call that North America and Europe continue to grow and that it has not seen any major cause for concern. In fact, Intel noted that its North American business was a standout in the first quarter on strength from its 45-nanometer server products, and that its international exposure essentially offset any domestic slowdown. In 2007, Intel derived roughly 85% of its revenue outside the United States. The company's NAND flash memory business remains a drag on Intel's overall results. In the first quarter, NAND revenue was flat as significant price declines offset unit growth. Intel said it is examining its capacity in an effort to mitigate the oversupply situation that has wreaked havoc on pricing. Intel's balance sheet shows that inventories are in good shape and that its financial condition remains quite sound. Intel has distanced itself from Advanced Micro Devices and has demonstrated that it is managing well in challenging times. Yet the macro environment is keeping sales and earnings prospects from being all they can be. Accordingly, we believe investors should continue to hold the stock, but would advise if looking to add new money to do so discriminately at this point given macro conditions. I'm Pat O'Hare for Briefing.com. Thanks for listening.